I have reduced one of my mortgage payments by 20%. Now I have a lot more room to save or invest. More cash flow every month, so now it's time to look for a new investment property. What's up everyone, my name is Joris, welcome back to my finance channel. Back in 2018 I took a mortgage loan for an investment property in the city of Antwerp. One part of my mortgage loan was a fixed rate on 25 years with an interest rate of 1.81%. The other part of my loan was a variable rate of 0.89% on 17 years, to be revised every 3 years. Those interest rates were pretty high at the time, but do keep in mind I was lending 100% of the value of the property. I didn't have to put in anything as a down payment, I only had to pay my registration, my bank and notary fees. So it was acceptable to have the rate a little bit higher. Now in 2021, the first revision of my mortgage is due, and I got an offer from my bank to lower the mortgage rate of the variable interest rate. They offered me a rate of 0.67%. This lower interest rate is indeed nice, but it has little effect on my monthly down payments. That specific part of my mortgage used to be €1,214.99 per month. And after the offer change, it would lower to €1,193.03. That is a reduction of a mere €21.96 per month. All in all, that's not that bad. That's around €250 saved per year, but it's too little for me. Luckily, besides the revisable interest rate, my bank also offers a resizable duration of the mortgage. The original duration of this specific loan was 17 years, but now 3 years later, I am again allowed to extend the loan to 17 years again, lowering my monthly payment. As a result, I am now paying €978 per month, coming down from €1,214.99. That's a difference of €236.99 per month, and that's a reduction of almost 20%. Some points I have to make here. Of course, this €236.99 per month, it's not all profit. Most of it is delayed mortgage principal payments, since my loan now is extended by 3 years. But because my interest rate also went down considerably, I am not even paying more in interest over time. My original plan cost me €17,857.16 in interest over the 17 years. And now my current plan costs me €11,342.96 for the next 17 years. If I add the already paid interest over the last 3 years, which were €5,628.28, my current plan costs me €16,971.24, or €885.92 lower than my original plan. So by both being able to lower my interest rate and extending the duration, I still pay less in interest, and I have another €236.99 per month extra cash flow. Of course, 3 years from now a new revision is planned and maybe interest rates will be higher at that point. But until then, I'm definitely enjoying my free money. Yes, I'm talking about free money. I do mean free money. Interest rates of 0.67% and even my fixed rate of 1.81% essentially cost me nothing over time. Inflation is going up and it's targeted to be around 2% now. Yearly, of course. The European Central Bank will do whatever they can to boost the inflation. And this means that all loans with an interest rate that is lower than this 2% are essentially free money. This is due to the value of the money I lend decreases more than the amount I have to pay in fees over time. So at the end of the day, I am winning. If interest rates do go up, and in 3 years my rate will be adjusted upwards, it can only go up to the double of the original rate, so the double of 0.89% or 1.78%, which is still extremely low. Currently I'm looking at new properties to invest in, and at this point, with my bigger monthly cash flow, my bigger positive monthly cash flow, it will be easier to get a new loan for a new property. Then I will also combine all loans together in one global loan and put all the properties under said loan. The interest rate will be higher, but the interesting part is that all outstanding capital can be relended again on 25 years. So a mortgage on 25 years again, severely limiting my monthly payments. So my current loan of 17 years and my other loan on 22 years are both combinable again on the 25 years. Whether it be this year, next year or 5 years from now, I can always extend the outstanding capital. If there's one thing you really need to remember from this video, is that you have to remember that the interest rates are not the main influence on your personal cash flow. In Europe, interest rates are so incredibly low that even a big change in the interest rate won't change much for your monthly payments. In my opinion, the duration is way more interesting, especially when you're taking out a loan for an investment property. For investment properties, it doesn't matter how much of the principal is paid off. Your monthly income, also known as the rent you're getting, will stay the same, or it will go up in inflation every year. More important here is the money you have left over at the end of the month. Positive cash flow is king. It's better to have a positive cash flow of 200 euros per month on a loan of 25 years than no cash flow on a loan of 20 years. That positive cash flow allows you to either pay for unexpected costs related to the properties, but it can also help you for new acquisitions. When you have a positive cash flow, you can keep building up your real estate portfolio. If you have no cash flow or even a negative cash flow, you will have to wait for your property to be paid off to expand your real estate investments. And in most cases, that just takes too long. Do you have a mortgage and do you have the option to extend that mortgage? Is extending the mortgage loan something you would do? Let me know in the comments below. If you have learned something new, please support the channel by liking this video, by subscribing and by hitting the notification bell. Also, share the knowledge. Share the channel with a friend. Break the finance taboo and start talking about personal finance with your family and friends. I thank you very much for watching and until next time.